Hey guys, it's Dave from the Dad Advice channel. We're going to be chatting about simplistic investing. If it's the first time for you watching this channel, welcome. We're a community created to learn and grow together and teach our children through our knowledge and experience. Before I made this video, I wanted to share a story. It's a short story of two men that are sitting down. One that is over the past year has made money just with index funds, and the second, just a very wealthy guy that has made tons of money with multiple businesses and multiple investments. And they're sitting and they're chatting, and the guy that's made money with index funds, asks the other gentleman, man, you have multiple businesses, you've made millions of dollars over the past year, you've flown around the world to make sure your operations are running smoothly. And he's just like, that sounds extremely stressful. and the gentleman says, yes, it was extremely stressful. And one thing that I've learned over the past multiple years is that making money, if it causes just gross amounts of stress, a lot of times it's just not worth it. So there's three things that I really think that can ride home a simplistic investing method that you don't have to be a genius. And it's kind of the superpower of getting good investment results. One is compounding interest, two is index funds, and three is pyramiding or being on autopilot. And what those things are is an index fund is basically a broad group of equities that basically covers some sort of market sector. It could be all the utility companies in the stock market, or it could be the S&P 500, or it could be all European companies over $10 billion. So you basically take an index, which you get the good, the bad, the ugly of companies, but you get a ton. So you get some that are really, really good, some really bad. And what ends up happening is everything averages out, and you usually get a decent return. On average, I think the S&P 500, which is one of the most followed indexes and what most people pit their investments against, goes up about 8% a year on average. So that's what an index fund is. What is compounding interest? Compounding interest is basically your money as it makes interest each year. The next year it makes more interest, and then the following year it's going to make even more interest, and it keeps going. It keeps multiplying on itself each year, and that is what compound interest is. Before I hopped on this video, I looked up a few online. There's a great one on the internet. Hopefully it's still up. Is nerdwallet.com has a really great one that can show you can multiply your money. So using compounding interest and using pyramiding. Pyramiding is basically it lowers your risk by not putting all your money into one thing at once. So if you can take your money and just put it on autopilot, as in you put $1,000 each month, every month, and then as your income increases or your business income increases, you just raise that up accordingly. So $1,500 a month, and it can start out very basic, $100 a month or $50 a month, going into one or two or three index funds. And it allows you to tier in over a long period of time, which lowers your risk. And so if the stock market goes down or goes up, it doesn't really matter as long as it continues to go up over time, which it has in the past. So those are kind of your three superpowers. People that I follow here, Benjamin Graham he wrote The Intelligent Investor, which Warren Buffett touts as like one of his best books. It talks about value investing. I didn't love the book, but what I did get out of it was that don't shoot for the moon. Don't go after Ponzi scheme investments where they're returning 20, 30% that are just unreal. If somebody was doing that by themselves, they would keep that to themselves. They wouldn't be sharing, 30% returns with you. So, and they chat about be okay with, average returns. Be okay with 8 or 9% returns a year. That's terrific. And over time, if you compound that, it's going to be huge. And most of the time, those huge returns are higher risk. So, those are kind of the main takeaways, but it also allows you to kind of be a superhuman investor and do realize that, running huge businesses can be great, or in high stress environments, making huge salaries can be wonderful, but there's nothing as wonderful as making a lot of money with very little stress, on a proven method like index funding. So hopefully that helps. If you found that helpful, definitely share, like, subscribe to the channel, and we'll keep putting out beneficial videos. See you guys. Love you.